Yo, what up, everybody? I'm gonna just do a little trade recap slash informational video on some stuff that happened on Wednesday, the 1st of April. I'm a little bit behind, but I was just trying to plan everything out and just get everything together before doing so. But I just want to maybe start out with like explaining like candles and what they are instead of just throwing terminology all over the place and not really having an explanation to it, especially if you've not really been into um, trading and stuff like that. So I guess we'll just start out with the candles. So your green candles are going to be bear or bullish. Bull. Think of a bull like running through a china shop and like just if you hold that little curtain up to it or whatever, it's gonna run through you. So just think of bull for your green, and then your red candles are gonna be bearish, meaning bad, but like bear. Think of like a bear bag of bones or whatever. It's bearish. I don't know how to fully explain it, but that's just how I learned it. Just think of a bare sack of bones or whatever the joke is they used to say. And so then on these candles, you're going to have an open and a closing point on a bearish candle and on a bullish candle, but they're going to be different. So the closing of a bullish candle is going to be at the top, because if you think of bull and we're going up, this is going to be the close. This is the highest point that the candle got to. It looks like it filled up all the way up here, but it ended up closing right here at the top of this candle. So for a live example, all these candles, they're closed. So they closed up at the top for a bullish candle. Go back. They open at the bottom though. So like think of it like an orchestra or whatever, how you pull it out and push it back in. Like that's how a candle is. So like it starts at the bottom, and however much it gets bought up to, that's where it closes at. And then for bearish, it's going to be the same thing, just flipped. So the open is at the top and the close is at the bottom, because when it opens, it's pushing down because it's bearish. It opens and pushes down until it eventually closes at the bottom, instead of on the bullish one, it closes at the top. But the bearish one's going to close at the bottom and open at the top. Another term that I use a lot and that you need to pay attention to is a fair value gap. So if you look on this example here, this is a bearish fair value gap. So the fair value gap is going to get marked from the first candle's bottom wick to the third candle's top wick. So you mark that, you grab your rectangle tool up there on TradingView, and you would mark it from the bottom wick of the first candle to the top wick of the third candle. And this is called a fair value gap. And so price will be going to the right, so it would be going this way. Now you would be waiting for price to do something like come down, come back up into the fair value gap, and then continue to go lower if you were expecting a bearish trend. And then same thing with this over here. You're still going to be going to the right, so we would be going from the candle, that first candle's, well, technically this would be the first candle. The first candle's top wick to the third wick of the third candle, or the bottom wick of the third candle. First wick of the first candle, or the top wick of the first candle to the bottom wick of the third candle. Lord have mercy. Bear with me. Just like that. And all this is saying is that when price ended up moving, it moved so fast that it left behind an area that needs to be retested again to continue to go in the same direction. So price moved so fast it left behind this gap for it to then be tested to see if the bulls will hold and continue to go higher, or if it'll get ran through and then come back down to the bottom. So that's what you're looking for. You want to look to see what price does with these fair value gaps. So just got my brush, maybe. So you would want price to come down. Oh wait, hold on. That looks shitty. Price come down, and then continue back up. That would be a good bullish trend because it's respecting a bullish fair value gap. So let's kind of get into what I took on Friday and or not Friday, Wednesday, and what I was seeing within the markets themselves. I kind of already marked this out because I was looking on Top Step and I was seeing where I actually entered and where I actually exited at, just so I could get you guys like the most like accurate information, I guess you could say. But whatever you do, or what you need to do is when you first get on, is look and see what is what we're going to be going for and what the market has been doing overnight. So it looks like we've rebalanced and we're trying to get back up out of this little canyon or whatever valley that we're in. So that would give me a kind of a bullish narrative. But there's also this 1 hour fair value gap or 4 hour fair value gap and a 15 minutes. So we'll just continue to drop down and see if we can't get a better picture of what's going on. Still, price just looks like it's continuing to rise, leaving back all these fair value gaps, which are a good thing, showing that the bulls are in control. But then you got an inverse fair value gap right here that just happened, so that's tricky. You might want to have to pay attention to that because we could also just come back down and re-tag into this because this looks like an unmitigated fair value gap. I don't know what the fuck that stuff. Oh yeah, those are my candles, but this looks unmitigated, meaning price has not touched back into this, so this could be a potential like spot point of interest. So we'll just continue to drop down. It looks like we're in a bearish downtrend now, kind of. Since 8 o'clock this morning, we've just tanked. We still got a 30-minute. We're inside a bearish 15-minute though. So this is going to be interesting coming in the market open. This is what I'm going to be paying attention to and trying to see if we end up flipping this fair value gap and we close above it, meaning this fair value gap is no more validated and it's bearish. So then that would flip and we would go bullish, delivering off this 15-minute. And also there's a 1 hour down here. So what time is this? 9:30. Market already open. We'll just play it out a little bit and see what we want to do. And right there we get an immediate big candle. I guess I entered off of, because we'd be inversing this 15-minute a lot. Let's see, at this line. And just delivering off of a 15-minute fair value gap. If we're going to go higher, we have to go lower before we can go higher. And if we want to go lower, we need to go higher before we can go lower. We can't just go in one direction. So when you see these fair value gaps getting respected and prices springing up from them, that's a good indication that you can try and enter a trade. And on the inverse and the closure of this candle is probably when I would go ahead and shoot for something above. I have the 30-second on Top Step, but I don't have the 30-second on TradingView, so I can't do that. But I do think I entered off of a 30-second fair value gap, just so it wasn't a random like thing I just picked and just tried to shoot for. But and being in the markets for, I'm not gonna say here would be like for years and years, but like with the little experience that I do have, I have seen that as soon as like something happens and reacts, like you gotta react to it or you're gonna miss out. So I mean, I would just be targeting this body only because I do think price ended up rejecting from here. Just shooting for like a 1-to-1 at least. 1-to-101, whatever. But it's not really the greatest example, only because this is not something that's always going to happen. Like price just shooting straight up and going to TP or going to whatever the case may be. But you can see price just ran from here. And then it ends up stopping. I'm pretty sure it turns around from here. And that 15-minute just got flipped right now. And then from there, it's going to continue to run. probably go up and get those data highs over here. But yeah, that was my thought process and what happened on Wednesday. I ended up hitting for 820 plus $60, so like 880 around there. And then on Wednesday or Thursday, I ended up hitting for 1,000. I took a trade before market open and then also a little bit after, so we can go ahead and show that. Mm-mm. I don't know exactly where. What time was it? 8:58. So if we let price run here, I'm pretty sure it's just gonna tag into this 15 minute, and then we're gonna go ahead and just catch everything that comes down with it. As the more and more time you spend on these, the more and more you'll notice that these fair value gaps are just like ping. It's like a game of ping pong, and it uses the fair value gaps as the paddles and the prices the pong. So it's just bouncing to and from these fair value gaps, and selecting your entry and managing your risk and your psychology is the hardest part of it all. The Everything else is like self-explanatory, really. You just have to want it. You have to put in that time and put in the hours and everything like that. So I'm pretty sure I'm just waiting for it to come up and hit into this 15-minute fair value gap, and then look for an inverse fair value gap, and then gonna go ahead and enter off of that. And right now, price is showing me that it's weak. It's really weak trying to get up here. Like, it's slowly climbing up there, and these candles aren't big candles at all. Like, I mean, they're decently sized. You got a couple maybe right here, but they're tired and like pushing all the way up, just to end up getting rejected by a 15-minute fair value gap because we're in a clear downtrend since the London session ended at 5 in the morning. Just a clear downtrend. We're trying to fight back up and get out of there because we're inside of another 15-minute right here, starting right here. Looking left is always crucial to see what price has done and reacted to on the other side. So like previously, like the day before, the week before, the month before, using all your resources that you can to better fit the picture of what price wants to do. So you're not just blindly guessing. So we finally tag up to this 15-minute fair value gap, and then I don't see anything really holding us down until we get down to here. But even then, that's still quite a ways away. So right now, I'm looking for just clear rejection off of this 15-minute fair value gap, followed by something getting inversed. So I'll go ahead and explain that whenever that does occur. Here we go. We have the perfect opportunity right here. So we usually want to see, well, we like to see either or, but we like to see fair value gaps getting respected. So we want it to get tagged into and then to shoot through it. But since there's this big 15-minute fair value gap right here, and we're thinking this is bearish, and we're just recalculating our like price to get back in, like, I don't know how to fully explain it, like recalibrating. I don't know. Like, we have to always move with these higher time frames. So in order to go lower, we got to go higher before we can then further go lower. Remember, like I said earlier, and then if we were trying to go higher, we would need to go lower before we could go higher. But right now, all this is telling me that this is a retagging back into this to go ahead and make it lower because we're going higher just to further go lower in a clear downtrend. And this is also previous to getting tagged into. This was unmitigated, so it just got created from this 1, 2, 3 candle pattern. Remember, the top wick of the third candle and the bottom wick of the first candle creates that fair value gap. So it's unmitigated, meaning price moved so fast down here and left this gap behind. It needs to get filled again. All that liquidity needs to get tagged into again before it can continue its move. So that's what I'm seeing it as right now. And then we're going to look for this fair value gap to go ahead and get like ran through. So you play price forward. Seeing if the 15-minute holds. And then boom. Well, let's back it up because we want to enter off this inverse. Put stops above these candles wicks because this is the highest point that price has went, but we're also inside of that 15-minute fair value gap. Oh crap. So and then targeting, you could do a 1-to-1, but remember that white line right, or that red line right there, that's the other 15-minute fair value gap. Yep, down here. So that's probably because it's also unmitigated as well. It was just created, but nothing has touched into it yet. So that's a good hot spot for it to want to travel to, since mitigating this first one. Remember, higher to go lower. So either this one holds and it continues to go back up, or it's going to get ran through and we're going to come down and take this liquidity over here. So I set that one up 1-to-1 5 RR. You go ahead and enter a sell position, 1 micro or 1 mini. Put your TP about right here. And then your stops, you want them above these highs, above the highest points of price that's already traveled there, and also inside the fair value gap as well. And then confirm and go ahead and let your trade run out and see how it works out. Also, you have nothing really going to hold you back right here. And then boom, you see TP got hit right there. Bro, it's kind of funny because I didn't know if this was going to hit, even though this is the trade I took. I'm looking like, whoa, what is this? But it helps when you have all your confluences in line and just have very high confidence in your trade, so it allows you to not feel like that. Because when I took the trade, I didn't even necessarily feel like that, but as I'm watching it back and not fully remembering what happened, I low-key was a little nervous about that one, but we ended up hitting full TP. So that was the trade that I took pre-market. I ended up taking another one after market opens, which would be like 9:30. So let's go ahead and play price through a little bit. Oh, crap. Hold on. I think this is where... when did I... Oh, yeah. Okay, so at 9:36 was when I entered. I just want to try and get the most accurate like trades for you guys, not just like hand-picked like shit that I've already like seen. So like something that I've actually taken with my like own accounts and stuff. So looking over here, you have a 3-minute that's inversed. This was supposed to hold price down, but it didn't, and we inversed it, meaning it got disrespected. So I'm looking for buys, and you got all the way up to, let's say, about here, and even London. These sessions, previous session high and previous session lows, are like a magnet for price. They love to go to these overnight sessions, so those are something to be paying attention to as well. Let's see what I actually entered. 23,733. I need to find out why I entered this trade. But I really don't have an explanation, honestly. Sometimes it's just that gut feeling. Whatever you have that you feel is gonna be right. So that's just what I did. I took this up to the high. What you need, I don't own it. I don't know who really who from it. Running. So, yeah. High body. You can show me my opponent. Off a 1 minute inversing. It's about all I got. 20 bit. So they want to spend the night. How many? For 400. Ooh, shit. No niggas probably know me. Take it to this 3 minute, also 1 minute fair value gap, unmitigated. I said your word like we don't know the real. This probably wasn't the best thing to do, but sometimes if you have that feeling, you gotta just take that shit. So that's what I did in that case and cashed out a little bit, and the price ends up reversing. The good old accumulate, manipulate higher to then distribute to the downside. It's like a common theme. But yeah, that's trade reviews for 4-1 and 4-2. I didn't end up trading on Friday, even though I probably should have and would have passed my accounts on that day, but I just ended up sitting that one out. So either tomorrow night or Monday morning, hopefully I can go ahead and get those passed. That would be clutch. But this one, clear reads. I would have easily got this one right. Downtrend, fair value gap on top of fair value gap, fair value gap, fair value gap, fair value gap. All bearish. Another 30. This 1 minute up here, I don't know how price went all the fucking way up here. This shit don't make no sense sometimes, but it wicked into that, but they weren't having that shit. They pushed it all the way down. So, look at this. The fuck? Maybe one of these 15 minutes. Try this one. You need to see which one makes the most sense, like which one price really reacted off of. Might be this one. Either way, you can still see price got wicked down really hard. So it doesn't matter which one, as long as you are able to identify that price is not going to go any higher than that. Because even this, on looking at it on the 1 minute time frame, it looks like it got inversed, but it didn't. So, me personally, seeing that it didn't get inversed, I would have entered off of this inverse and then just kept my stop up here. I don't know why it keeps fucking popping two down. That shit is stupid. So, I would have entered off of this inverse, seeing that price wasn't gonna go any higher than what it just went, and all these fair value gaps are still gonna hold. So, just targeting at least a 1-to-1. And this is all I would have needed to pass my account. Actually, would have been like be 560. The fuck? And then TP would have got smacked quickly. There was only like, I mean, it went all overnight, but you can't really trade that. I mean, you could trade this off bouncing off of this 15 and watch it come all the way down, but there wasn't a day to trade on Friday since of the holiday. They cut the hours short, so yeah. But I'm looking forward to Monday and Sunday night to see what happens. But yeah, that's all, and we'll catch you on the next one.